The speakers first, may I invite Sri Rajesh Kumar, Managing Director and CEO, TransUnion CIBIL. May we have a round of applause for all our speakers? I hope you had good dessert and that shows in the energy as well. Mr. Sanjeev Mehta, Managing Director, Standard Chartered Bank. Mr. Shashwat Nakrani, Founder and CEO, BharatPe. Mr. Abhishek Sinha, Co-Founder and CEO, Eco India. Mr. Vipul Rungta, MD and CEO, HDFC Capital. We welcome you all to the stage. And to moderate this conversation, Saranya Gopinath. Let's hear it for Saranya. She leads policy and government affairs at Razorpay. Over the past 15 years, she has garnered product and policy expertise in the domains of fintech and digital public infrastructure. Her previous roles include head of fintech policy at Google, general counsel Khosla Labs, and she's a co-founder of the industry body DICE. It's over to you, Saranya.
Hello. Hello, good afternoon, everyone. Pleasure to meet you all at today's event. Before we proceed further, I'll take a minute to introduce my co-panelists. Mr. Rajesh Kumar, Managing Director and CEO of TransUnion. He's responsible for strategizing and steering TransUnion CIBIL's business to support India's financial ecosystem in navigating sustainable credit growth while managing risk. Sanjeev Mehta, he's the Managing Director, BKG Sales South Asia, Standard Chartered Bank. With an experience of over 25 years, Sanjeev Mehta is a homegrown banker who's currently serving as the Managing Director, Head Transaction, BKG Sales Corporate, Commercial and Institutional BKG South Asia at Standard Chartered Bank. And we have with us Shashwat Nakrani. He's the founder and CEO of BharatPe. He's the youngest person to make it to the prestigious IIFL Wealth Hurun India Rich List. In fact, he's among 13 self-made billionaires born in the 1990s who joined the 1,000+ crore club this year. Mr. Abhishek Sinha, he will be joining us shortly. He's the co-founder and CEO of Eco India. He started his first venture and exited it in 2007, pursuant to which he's started Eco to pursue his vision to promote mobile phones as financial identity for people at the bottom of the pyramid. And of course, last but not least, Mr. Vipul Rungta. He's the MD and CEO of HDFC Capital. He currently manages the largest residential private equity fund in India. Vipul has a cumulative experience of more than 23 years in mortgages, supply side and real estate, private equity funding, prop tech across the housing ecosystem. Thank you, everyone. It's a pleasure to have you all. Before we get started, I wanted to thank all of you for joining us at this wonderful event today. Over the last 10 years, India has made substantial strides in its financial growth journey. This has been a combination of policy, regulatory, and infrastructure innovations by the government of India. This has led to us halving the number of people below the poverty line in the last 10 years. We're on a steady growth path with an expected projected growth of 6.3% year on year. All of this has translated into last mile benefits for the Indians in terms of financial inclusion, their access to markets, their ability to access formal financial services, including loans, often for the first time in history. This is a subject matter that we want to discuss at today's panel, and we will avail of the varied experts we have with us to share their insights on India's growth journey over the years. With that, we'll kickstart our conversation. Sanjeev, I'm going to get started with you. In leading Standard Chartered Bank, and especially given your vantage point of looking at South Asia, how do you see India's journey in the region in the past decade? and the opportunities that India has vis-a-vis its neighbors over the next 5 to 10 years?
Sure. Hi. Hi, Saranya. Hi, everyone. A question which really is very close to my heart is exactly why India? And why should we be invested in India? And a banker like me, from a career standpoint, have not looked at opportunities outside of India, is believing in India and the growth story of India. So going back a decade, if you actually talk about businesses being built in the year 2015 or maybe later, were all which were actually, I would say, physical. They were unstructured in terms of being able to have the reach. They were into manufacturing led, heavy industries and things like that, right? Post that, which what I call is after 2015, a digital revolution which started to happen, is that the connectivity between India and South Asian markets became very, very relevant. And the markets which were actually way behind us as India, they came in leapfrog, and they actually came in much faster ahead, just thanks to digital and the revolution of India as digital. So what these markets learned is India's growth backed by digital, and then is products that India started to deliver in South Asia. So I know of at least 2 companies here on this panel which are actually supplying goods to South Asian markets. Global companies, their regional headquarters are based out of India. The goods that gets exported out of India. South Asian markets are all being supplied out of India. So the Make in India story is in any case a great story. But something that India has given to South Asian markets is, in my view, digital. And that platform, which is now allowing them to leapfrog and come to an era and jump out from, which is what I call as physical, into a digital era. So that's all India having shown the world.
No, thank you for that, and I completely agree with that. I think 2 experiences to my mind have happened in the past couple of years. Actually, we have Abhishek with us. Hello, Abhishek. Pleasure to have you here. Abhishek and I actually go a little while back, so I'll get to you in just a minute. Pleasure to have you. But to your point, I think definitely it's been the digital story. What started off as a phygital story is definitely getting more online. And I think the transition point has happened between, to your point, retail digital experiences and then upscaling them to the next level. And I think we'll start with the next step of the pyramid, which is payments. And I think maybe Bharat Pay will have some perspective on how you have seen the digital payments journey play out. What has been the highlights for the payments journey in your experience in the past 5 to 10 years? And what do you see as the next opportunities?
Yeah, so hi everyone. We all seen digital payments. India has skipped a leg, which is the credit card leg, right? We have not seen credit cards being penetrated to the entire country, and we kind of leapfrogged that step and went to directly mobile payments. UPI in that sense has been revolutionary technology. I don't think any country in the world is operating as fast and as instant as UPI. We've been talked about in most of the countries, most of the Congress, and they're trying to figure out how to catch up with that. So I think that sense, we are kind of leading the charge when it comes to digital payments. As of now, we can safely say that for our country, UPI payment has become, and especially the QR scan and pay payment has become the by default mode of payment across the country. You can see it from as small as a chai wala to as big as an airlines company using the UPI volumes going up. From our perspective, and we've been having interactions with NPCI and RBI and all the regulators, the future that everyone is seeing in is converting this debit transaction from a bank-to-bank transfer into a credit transaction, same at the UPI POS itself. And that's where the RuPay credit card being accepted at all the QR codes by default come into picture. See, the beauty of that is the entire hardware piece, where you need a hardware to accept a card payment, completely goes out of picture, and millions of QR code becomes a by default terminal to accept credit across the country. And that is something I think everyone is really looking forward to and would be a game changer for our country.
No, absolutely. Thank you for that. And 100% agree with your perspective and some of the global firsts we've had in terms of retail digital payments. But I think we wouldn't be able to get a complete picture of digital payments without talking to Abhishek. I think ECO has led the charge in last mile delivery of financial services as well as transactions over the past 10 years. And of course, today you're providing a full suite of financial services to enable last mile delivery. So you have seen it from business correspondent through Aadhaar enabled payments to UPI and now further. Through your journey, I think what would you see as major highlights and what as possible challenges or expectations that we can have going forward? I think he highlighted some things on credit, which we'll get to, but in terms of payment and enabling the financial inclusion reach, what to your mind have been some of our wins?
Saranya, thanks a lot for asking me this question, and my apologies for being late here. In the last almost 16 years of ECO, we actually started the journey with just distribution of financial services. But over the years, there's been a lot of understanding of the customer base we serve. And it was at least a discovery for us. It was a revelation for us. Because you tend to kind of assume that everybody's financial lives are similar to our own, only to realize that 90% of the economically active individuals in India don't earn salaries. And when they don't earn salaries, which means that they earn, instead of earning once a month, they are earning multiple times in a month. Instead of earning on a stipulated date, the date varies. Sometimes, most of the times, it's unpredictable, especially for people who are beginning in their journey of being a solo entrepreneur or a micro entrepreneur or a self-earning kind of a individual. And that's what brings out the gaps in a fairly widened manner, in the sense that if you see our utility bills, phone bills, OTT subscriptions, everything is once a month. It is so organized for people who earn once a month. And now let's try and put ourselves in the shoes of a person where the predictability of amount, date is not there, but the aspiration to have very similar lifestyle is right up there. Yeah, just as you and I want to send our children to good schools, so do they. But she finds it very difficult to manage a quarterly payment of school fees or manage even a monthly EMI. And so that's where there is huge gap and huge opportunity. I just want to share, we introduced in our business, we introduced a one-day loan and a weekend loan, because in our business, it is all about rotation of cash. And on weekends, the banking services are not available. So we said, okay, we'll give you loans for a day. So which means that you take it in the morning, return it the next day, or you take it and return it post the weekend. And we disbursed 3,000 crore rupees. That's not my outstanding book. That's just the gross value. The outstanding at any given point in time used to be just about, say, 5-7 crore a day. But the most interesting bit was that we got 2,999 crores plus back. And it tells a lot about the fact that if you enter their lives, and sorry for a longish answer, is that it's not that they don't have, there are informal money lenders who are giving them access to funds just in time, but neither the money lender is in the formal setup, nor is the borrower. And I think especially thanks to the digital public infrastructure we have now in play, both these sides can be brought into the formal setup. And that's where there is a huge opportunity to stitch this up. And that's really, what we have kind of understood over the years as far as playing in this landscape is concerned. Let me take a pause.
Fantastic. No, thank you so much for that. And absolutely, I think the idea that certain parts of India will not be able to properly avail of the services, it's a reach problem rather than a suitability problem, or rather than a suitability and appropriateness concern. A large part of it is just ensuring that the right products are made for the right people and they're provided access to the same. And I think we've had a wonderful perspective so far on the retail payments journey, which of course the next leg of which is lending. And the idea of retail payments, as even Raghuram Rajan had mentioned in a recent panel discussion, was that digital payments is to provide the habit creation to eventually lead to digital loans. And with that, of course, we'll come to Rajesh. So what has been, given that you are part of TransUnion and CIBIL, and you have a fantastic vantage point of the lending ecosystem in India, you have seen it grow from strength to strength, and you are a trust intermediary in the ecosystem. What to your mind has been India's growth story in terms of lending, and how has it changed in the past 5 to 10 years?
Thank you, Charanya. First of all, it's really wonderful to be here today. I've been watching over the last few months the scale, size and ambition with which the Indian government is conducting the G20 summit. So super happy and proud to be a part of this forum today. So Saranya, coming back to your question, you asked me a question that I can perhaps sit here till breakfast tomorrow morning and keep talking about. I've been a banker and associated with the lending industry all my life. And over the last 20 years, coming to your question now, the India growth story, all of us know the growth story, so I'm not going to bore you with the well-known facts. But having started underwriting with everything manual in the past versus where we've come today, and the very fortunate position that we've got to play as TU CIBIL, where we, the primary reason we exist is to create trust between the borrower and the lender in a marketplace where both don't know each other, have never met, in all likelihood will never meet. So our business is really about creating trust between the borrower and the lender in the marketplace. Now, how do we go about doing that? And I'll circle back to Saranya's question as well. How do we go about doing that? Essentially, we create what we very simplistically call, we help in creating ID and PD. ID, I mean identity, right? First of all, if Sanjeev's bank wants to give a loan to Saranya, who's sitting in some corner of Tamil Nadu, for example, first of all, is she Saranya that she's claiming to be, right? No one knows that. Unless you go do an Aadhaar in front of you and do that kind of a biometric test, you don't know that. So a CIBIL bureau report, first of all, establishes identity. And then Sanjeev's underwriter sitting in some branch somewhere has to be sure that the money they give Saranya is coming back, right? That's a probability of default. So TransUnion CIBIL, our primary role is to create that trust through by establishing the identity and then trying to, as accurately as possible, actually compute the probability of default. Now, having said that, I think we've been very fortunate to be the leading bureau in India, and goes very well with our, some of our country's nation-building objectives. Last 15 years, CIBIL has played a critical role in, a significant role in enabling 7x, 10x, and 13x growth in the lending industry. And these are all numbers that I'm talking of: first-time borrowers, young women borrowers, borrowers from semi-urban and rural parts of the country. We've had 7, 10, and 13x growth. So partly it's because of the entire ecosystem. Now I'll come to your second question. So this is what we do at CIBIL. This is what we've been playing a role over the years. Now moving on to our ecosystem, right? Again, on the other side, when I was on the lending side, I've seen how all this evolves. This entire digitization that we talk about, digitalization that we talk about, this digital public infrastructure that we talk about, we go around the world in different forums. There is absolutely no story like India's story. We've been very fortunate. We have a very progressive government. India is obviously now the knowledge and innovation hub in most areas, and we are the lucky recipients in the BFSA sector. So a lot of progress in the last few years. Turnaround times have come down significantly. There's more confidence lending to first-time borrowers. Having said that, lots more work to do. It's forums like these where we come together, and I think the next few steps to round up my answer to a question is, I think the next few steps really are about getting some of the larger ecosystems to connect to each other. We have a lot of digital public goods. I think now we need some, we are working closely with the policymakers and regulators. Our attempt really is to see how we can connect these ecosystems, A, and B, make access to data a lot easier and simpler, obviously keeping in mind all the guardrails and guide rails like information security, data privacy, etc. Keeping that in mind, we want to see how we can bring all of this together and make our models even more powerful and therefore increase the trust. I hope I answered you, Saranya, without keeping you all till breakfast.
No, thank you so much for that, and absolutely agree with you. I think a couple of key points is one, the level of growth that we've seen, 5x, 10x, 13x over the past couple of years. But then in addition, I think what we're getting is the network infrastructure that we have in terms of intermediaries and entities, starting with banks, having last mile financial service providers, having payments enablers, having credit enablers. All of this is towards availing of the policy, regulatory infrastructure that the country has come together for last mile service. But of course, the connective tissue in all of this to enable our startup ecosystem and our markets to play comes from the capital world, and ensuring that we have adequate access to capital, and there is an ecosystem which not only encourages acceptance of it, but responsible deployment in the hands of individual retail investors as well as institutional investors. And I think you will be best placed to tell us about how not only is the India startup ecosystem one of the most vibrant in the world, but I would argue that India's fintech ecosystem even more so. So if you could give a perspective on how you're seeing institutional investments in India, how they've progressed in the last 5 to 10 years, specifically in the startup story and how that's impacted, and also your perspective on how retail investments have grown 5 to 10 years as well.
Okay, so first of all, thank you. I think like everything else, finance becomes the oil that runs the machines, and especially in the times that we are in right now, where the euphoria attached to finance has kind of died out globally, including India. So maybe 2 years back, a conference like this and talk about startups, you would have at least say 40 unicorns, and you would have another 400 what they call soonicorns, which would be saying I'm soon becoming a unicorn. Those things have kind of died out. Primarily, it is about the fact that it is no longer about a market grab. It is about it is no longer about taking a business model which has worked in some other geography and putting it in your geography. It is about actual innovation. It's about being able to solve a problem. But most importantly, it is about being able to solve a problem and get a price for it. I think that has what has changed, and that in turn has changed the fintech landscape as to how money is to be funded to the startup ecosystem. Today, I don't think the situation is that you have money available on the house irrespective of what plan you have. Having said that, like in any maturing of any market, I think it's a very positive thing what has happened, because the last thing you want is that the not so deserving and not sustainable businesses get the right kind of funding or irrational funding. The difference between the stable businesses and the not so stable is clearly coming out, and it has its own pains, but I think I see it as phenomenal for the financing market. Talking about ourselves, and you talked about retail participation, in the equity markets, mutual fund industry, if I can put it this way, mutual fund industry has become 5 times in the last 10 years. Today, mutual fund industry in India has about 65 lakh crores, which is about $800 billion. It was about 140, $150 billion 5 years back. In comparison, private equity business used to be only $2 billion 10 years back. Today it is about $100 billion in India. That obviously includes institutional equity, it includes venture capital, it includes mid-growth capital, so on and so forth. So obviously it has worked in leaps and bounds, and the entire concept of alternate assets has come into picture. I think a whole new class of local domestic capital that has also emerged. So India today has about 5,000 family offices, and it has about 500 large family offices, which are funds in themselves, which are not counted in this PVC ecosystem, where they are actually having professional managers running their businesses and running their setups. And that is again phenomenal maturing of the financing landscape. The other thing is, you talked about from the financing perspective is about how is it that I can actually raise that capital, and how easy it can raise, how much I can raise. I think that factor also comes about having a sound business plan. And as I mentioned earlier, should have something which makes money.
No, completely agree. And I think it's a double-edged sword. It definitely requires more of our startups and our indigenous ecosystem to be responsible players. And it's a direct reflection of where we are as a country. It's a direct reflection of where our markets are, that we are looking for more mature markets. We don't mind an extra, a slightly larger ticket size with a little more assurance, with a little more conviction in terms of the business model, and with some horizon of profitability, maybe. But before we get into that, I think another perspective which will be very useful from you is, what are the any emerging either markets or domains that you see from a private equity venture capital perspective that you're excited about in the next upcoming years?
I will start with what I'm not excited about.
Most important.
Okay, so, they say data is the new oil. And in my opinion, unrefined data is absolute trash. There is nobody who does not have unrefined data. So I would probably say that anybody who is trying to build any fintech ecosystem or any non-fintech ecosystem saying that ultimately it'll go into a neobank, that is hinging on the fact that I can use the same data point and cross-sell to that individual multiple things. That is not going to happen so easily. And
Especially now that we've got a Digital Data Protection Act in place.
absolutely. So there is now a formal legal ecosystem that you have to maneuver. And also, just having data does not mean that I'll be able to cross-sell. The best part is that now the computing power exists. So what solutions I'm able to provide and how I can do the engagement ecosystem, that is good. So coming to what we can do, I think in the same context, anything which is creating customer engagement ecosystems for cross-sell, whether it is on the fintech ecosystem, we were just talking about metaverse off the podium, or anything that keeps, whether it's gamification, whether it is anything, whether it's simple thing like a WhatsApp bot, anything that keeps me engaged is what will be the bedrock of cross-sell. And we at HDFC Capital, where we are more focused on the housing ecosystem of it, we are very focused on and very excited about engagement and cross-sell opportunities. That's one. B, I mentioned, ultimately, you end up using only 2% of the apps on your phone. And that is again about the engagement part. So ecosystems, full ecosystems attached to things, one-stop shop for everything is what will happen. So for example, a bank website today is not about bank. It's actually everything. I can do all my shopping there, I can do my ticket booking there, I can do my banking there, and so on and so forth. So anything which involves a full ecosystem being there, that is what matters. And these are two things which we feel is going to be a very, very big factor.
No, completely agree. And I think we've created ecosystems, and I think India, especially with all the people on this panel, we can say that even over, let's say, big tech network effects, we have been able to create, whether you call them super apps, whether you call them ecosystems, we have at least made a dent in that ecosystem for sure. But I think the underlying message in what you're saying is having a good understanding of what the customer wants. It's not a spray and pray of cross-selling. It is ensuring that you have a keen perspective of what the customer needs are and where we can go from there. And I think on that point, I have a soft spot, as I think most of the country does, for the MSMEs of the nation. So I think Sanjeev and Shashwat, definitely would be great to get your perspectives on the MSMEs of the country, two very different market segments. But if you could share your thoughts on the MSME story and what you're excited for the MSMEs next.
Yeah, thanks. So MSMEs, if you actually see how are we evolving? 2015 again, I take that as a ballpark year of revolution. 2015 and below or before that, MSMEs were there, but they were again connected to each other through, like what we are saying, ecosystem. But they were only busy doing manufacturing. If the guy was a tier 3 supplier to some company, he was only busy doing that. Now, post 2015, what has actually happened is that I started to think, while I am supplying to this company, can I actually supply it to somebody in, let's say, some export-driven market, somewhere overseas, somewhere global? Can I become supplier to maybe a tier 1, or can I elevate myself to be a tier 1 company? And over a period of time, when they started to do this, came in a challenge of credit. For expansion, for growth, they need money. And which is where I would say then large part of the ecosystem supported by fintechs, banks, civil as infrastructure, that came in to support these MSMEs to come in together to actually avail credit. And that was a very big part of, I would say, a ecosystem where they needed the right hand holding. Banks came in as a first call or case in point. But post banks, it was not only limited to banks, it was the fintech ecosystem, it was a QR code ecosystem which was supplied by Bharat Pay. All of that came into the help of the MSMEs to actually build I would say a story of India, which is why we are today thriving on India's growth, is because all of those started seeing growth. And that growth is now today, everybody is touching higher double digits, gone into from teens into 20s. It's not a small story anymore. And that is a revolution in my view from 15, 16 onwards, which has started to build MSMEs. I have one of the companies from Europe. He is one of those who supplies Indian FMCG to Indian consumers in Europe. So imagine a company, a startup in Europe, but like all the Indians who are there, they want to have, let's say, for example, Indian Maggi. The Indian Maggi is not there. Now if he's supporting that as an infrastructure to say that, okay, you want Indian Maggi, I will deliver to you at your home. Now, where is all that happening? It's basically happening where somebody is a supplier, giving it to Europe, and he's with that particular startup as an ecosystem, able to deliver it to the Indian person at his house. So it's a revolution, in my view, supported by digital, which has actually supported everybody in the ecosystem there.
Yeah, so just to add to that, from our perspective at Bharat Pay, the people we are catering to is small offline retailers, which are even smaller than MSMEs, right? What we've observed is before UPI, they were all accepting cash as a majority part of their business. Gradually, the share of the digital payments is increasing. The average transaction value of these transactions is increasing. What we are observing is at the same store, the transactions keep growing and kind of cash percentage of their overall collection keeps going lesser and lesser, which is leading to us being able to underwrite these merchants better and better because we have a larger view of their cash flow. And since the cash flow is coming into the formal economy, and that is leading to the bigger success, that is getting these small offline retailers being part of formal credit economy, where banks and traditional NBFCs were struggling to cater to before. So I would say that the most exciting part, and in fact BharatPe is existing to cater to basically this part of the ecosystem primarily. The biggest part of the excitement at our company is to formalize more and more credit into these kind of offline retailers and to help them expand into the larger business. So yeah, that's what I would say.
No, thank you so much for that. And I absolutely agree. I think two aspects have been driving whether it is change in India. It is Indians on both sides of the market, whether it is globally being the demand drivers for Maggi or yoga or whatever it is our next biggest export is, as well as the people creating products that can be driven towards export international markets as well. If you could take a minute and maybe Rajesh, you could give your perspectives, what are you seeing as financial entities or fintechs in India going global? What is your take on how are Indian companies, especially in the fintech ecosystem, taking their next global journey? I can speak on behalf of, let's say, Razorpay, and we have recently also acquired companies in Singapore and Kerlek, and that's been part of our journey of exporting our business. But UPI is going global, our company is going to go global as well.
Yeah, well, that's a great question, Saranya. I think now this is the next big responsibility we carry as Indians now, is to see how we can take some of our tech stack global. And very interestingly, recently I've been a part of a few conversations, representatives from different countries, and the easy conclusion actually was that 80% of all that we do is pretty much similar. We're all trying to solve the same problems, the same identity and probability of default, and all the ease of payments, right? Like what UPI has done in this country. So we've all been reading about France and a few other countries now adopting UPI. It's just a matter of time, because all of what we are doing today is going to be beneficial to everybody in every country. As always, some of the more developed countries would be behind because they have legacy systems that's going to be more expensive to replace, whereas the developing countries, including countries like us, we have the unique advantage that since we are late, it's easier for us to leapfrog, right? And to go further into Saranya's question, coincidentally now some of the LATAM countries on one side, then obviously some of the smaller or the developing Asian countries, they're all very interested in, first of all, the Indian tech stack, right? Then all the digital public goods that we talk about, like DigiLocker, right? They're all very interested in understanding that. Aadhaar, obviously, and both UPI data, the payments, not just the ecosystem, the data as well, and GST finally. So I think almost every single developing or let's say lesser developed country, their biggest challenge is really to ensure that credit flows into the right sectors, right? That's how economies grow. And for credit to flow into the right sectors, we're all solving the same problem. So coming back to the point, I think India is now at a unique stage where, in fact, a lot of my friends in the banking system in the US tell me that we are already 10, 15 years ahead. I mean, I feel very proud when I hear that. I don't know about 10, 15 years, but it makes me very proud. But yeah, I think to close the point, surely there's going to be a lot of interesting opportunities for the Indian organization, young startups and fintechs. The only, I guess, two bit that I can add, it'll be useful for some of these fintechs to come together, create ecosystem of ecosystems, and take across larger platforms. One challenge that I hear from some of our clients, bankers in India and outside, one issue is that a lot of our startup community, since it's a startup forum, a lot of our startup community goes very narrow but deep, very verticalized in the way, in the way they operate and solve for problems. But for the larger lenders, etc., on the other side, that just means way too many integrations. and they're scared to do so many integrations that touch their core systems. So as we go outside, it would be good to form small little consortiums and kind of bundle up some of our products and take it outside. Thank you.
I definitely have to agree with your friend on their perspectives on international banking systems versus India's. I think many Indians across the country have leapfrogged over, let's say, net banking experience, have gone directly to mobile. They will conduct digital transactions, but hopefully never see a checkbook in their life. And I think that's a good world to live in. And I think that's really where we are, whether it's in terms of the next innovations or infrastructure that we've exported, and enabling a robust regulatory ecosystem that supports each of these interventions and innovations with the continuing North Star of being customer protection and customer enablement. And I think that is kudos to our regulators and our government policies, that they have been able to enable that hand in hand. Innovation has never left any individual behind. And I think with that, and I don't know how much time we have left, I'm going to start with Abhishek. This is possibly a nerd question, but I think this group I can ask these questions. What are your top 1 or 2 favorite or most notable regulatory or policy or product interventions in the financial ecosystem in the past 10 years? This is the way other people ask what your favorite movie is. I ask what your favorite financial policy is. Sorry.
Difficult to point out 1 or 2, but I think because we've been here for a while, almost 16 years, we've seen multiple cycles of how the regulatory evolution kind of takes place. And I think there is increasing appreciation to how, RBI, right from the time they started with business correspondence, which was only for not-for-profits, to defining mobile banking, which one felt was fairly prescriptive than principle-based, to now what is happening with lending guidelines. But I think what one has started to appreciate over a period of time is that it allows for innovation, and then RBI has now, there is definitely a lot of appreciation to how they find when systemic risk starts to appear in the system. And clearly, they are now pushing, as the systemic risk rises, they are pushing towards more regulatory regime. Go get yourself a license kind of a thing. I think it is a good move. It is also going to increase a lot of regulatory challenges for the regulator. How are they going to manage so many more entities across types of players, As far as 1 or 2, I find, I think the fact that they allowed for this unbundling and have been supportive of this unbundling and decentralization, it was very difficult to imagine that being a, let's say, customer with a X bank, I could use a Y app to debit my account. So unbundling of the movement of money with movement of consent, and now unbundling of the credit infrastructure, the credit value chain, and RBI supporting it. They introduced this whole account aggregator infrastructure. I think these have been absolutely phenomenal and allowing for a lot of private innovation to happen.
No, completely. I think the regulator has also been growing with the ecosystem. And like you said, earlier, 10, 15 years ago, fintechs were low regulated or barely regulated.
Yeah.
But I think we as fintech ecosystem are moving towards regulation. We're embracing getting licenses from the RBI. And as Vipul had mentioned, more mature businesses.
As an entrepreneur, one always feels that regulators are moving slow. But I think over a period of time, you start to appreciate how they are moving.
100%.
And how they kind of pace themselves.
Yes.
And that is very important to build that understanding is very important.
They allow
Plus the fact that they have now allowed for sandboxing, they've created this new entity where a lot more innovation is happening. Plus there was a recent announcement where they are going to deploy AI for RBI is going to deploy AI for, yeah,
Conversational payments enabled through NPCI.
yeah, absolutely. And that's the next leapfrog which is going to come from. Yeah.
Vipul, from mature businesses and mature ecosystem to what you see as highs in regulatory wins.
So, you know, coming from a financial background, I want to talk about two things which are not exactly financial, but I think has had serious impact on every business. One is, I think we have completely underrating or underrated the progress of road infrastructure in India. The fact that tier 2 towns and tier 3 towns are closer to tier 1 towns physically, whether it's by roads or railways or in some cases the airports, that has completely brought on a whole new skill set of people, a whole diversity of people, and plug that with the digital ecosystem, because only digital ecosystem without the right physical network would not have worked. So I think it is phenomenal. What we have seen in last 5 years, we have not seen in the previous 25 years. That is the kind of progress that has happened.
India is being one of the first for the sachetization of internet recharge packs, why you can all confidently say changed the trajectory of our country, 100%.
And second, from a real estate perspective, I think it's also very important to have some kind of fear. And I think in general, it is important. Fear of law is something that is generally not a topic of pride in India. But what has happened is this entire RERA, which they have done, the Real Estate Act, which basically means that a very fundamental attribute, that is housing, today the supplier of that is regulated. And there is a fear now that either I have to complete the house or I have to either go behind bars or maybe go out of the country. I can't be staying in the place and not completing my stuff. So I think it's very strong. It sends a very strong message. And it has huge ramifications on obviously the entire financial ecosystem.
No, very well put. The downstream impacts of these marquee changes are cannot be understated. Sanjeev, over to you. Your marquee financial regulatory changes.
See, banking is regulated, right? And there's nothing that drives and what we think of that we can do without any regulatory environment not being there. But only one point that I would say is what I've seen change again since last 10 years is the regulations are open to, or regulators are open to listening to you if you want to actually want any kind of change today, which is in the best interest of the businesses, industries, economy, I would say MSMEs, retail, consumers. So anything which is impacting the country as a whole, regulators are open to listening, regulators are open to discussion and willing to change the regulations. And that's, in my view, a very, very big change that I've seen in the entire regulatory landscape, and which has allowed us to do many more things which we were earlier limited or restricted and we could not even think of. And that's a big change in my view, from regulatory bodies coming in step forward, industry bodies coming in step forward, and maybe the ecosystem player like banks and other players coming in together to make it happen. Otherwise, it was always a dream. It was always like, this could happen, but then this regulation prohibits that. So that's a big one in mind.
I mean, the setting up of RBIH, the setting up of the fintech department, a whole new body within RBI, SEBI being completely engaging with finfluencers, with that ecosystem. I completely agree. I think hats off to them for the way they've been engaging with the ecosystem at large. 100%.
Yeah, thanks.
Rajesh?
Yeah, I know we're at the end of time. So for me, the two most important developments or product, both policy and product, actually is UPI and GST without a doubt. I think we've hardly even scratched the surface on the actual utilities of both UPI and GST. And I'm very sure that over the next few years, these two are going to contribute very significantly to the growth of our GDP.
Yeah, I think from my perspective, digital lending guidelines that came last year has been one of the biggest thing everybody was looking forward to. Actually, there was some hesitation from fintech side, from bank side, as to how one approaches this partnership between new age companies and the regulated entities. And these guidelines very beautifully and kind of there is no if and buts, right? It's very clear. It's a clear set of guidelines within what framework can fintechs and regulated entities can work together to do digital lending. And I think that's one of the biggest foundations of digital credit growth that is yet to come in India.
I think we are at time, but I mean, thank you for the wonderfully wide set of perspectives. Right from what are the favorite regulatory interventions, I think we went from enabling legislation to appreciating restrictive legislation as well. And I think that shows you the wide gambit of not just entities and domains in India, but also the opportunities that we have as a country. Thank you so much, everyone, for your time. This was an absolute pleasure for having a conversation. Thank you.
Thank you, Sharanya, and we would like all the panelists to please stay back on stage because you have an important function to do, which is the launch of the FinTech White Paper, Unlocking Economic Growth Through FinTech. So I request all the panelists to please stay on the stage, and while we, of course, take time to thank the panelists for their insights on this panel discussion that was about banking, innovation, and regulation. I particularly liked that segment where everyone was recommending their favorite policy intervention. And of course, there was lots to learn from that sharing. So ladies and gentlemen, here it is, a white paper. You'll also find the QR code in your bags, a conference kit, if you would like to know more about what's in there. May we hear it for the panel once again? Thank you so much for launching, in fact, relaunching the white paper. It's been out, but at this forum of the G20 DIA Summit, it has particular significance. And while we thank the panelists, it's time to invite our next set of guests on stage. And in the interest of time, I'm going to do that. Mr. Patrick C. Kondo, CEO, Seeker Technologies of USA. Welcome